This is an emergency message. Stop what you're doing and listen carefully. The rules have changed, and most people don't realize it yet. It is Sunday evening, January 25th, 2026. While the news is focused on sports and celebrities, something serious is happening in Washington, D.C. This is not a normal market dip. This is not a small correction. We are now on a countdown. In 6 days, the entire system could freeze. Earlier today at 2:14 p.m. Eastern Time, President Trump posted a message that shocked Wall Street. It wasn't a warning. It wasn't a strategy. It was direct. The message said there will be a government shutdown in 6 days. No deal. America first. That single statement caused risk managers, banks, and financial institutions to stop and reassess everything. Now, many people are probably thinking, we've seen this before. There were shutdowns in 2018. There were shutdowns in 2023. Back then, politicians argued, things closed for a short time, money was printed, and life went on. But this time is different. In 2018, inflation was low. Debt was much smaller. The world was relatively stable. Today, inflation is high. US debt is near $40 trillion. Global tensions are rising everywhere. And the most important difference is this. This shutdown is not just about closing government offices. It threatens to shut down the flow of critical financial data. That data guides markets, banks, and investors. Without it, the system is flying blind. It's like taking the instruments away from a pilot in the middle of a storm. That is why this moment matters. Here is something most people don't understand. The financial system is not run by people sitting in a room making guesses. It is run by computers. Massive algorithms at places like BlackRock, Vanguard, and the Federal Reserve make decisions every second. These machines survive on data. Without data, they cannot function. They need inflation numbers, like the Consumer Price Index, to see if prices are rising. They need job reports to see if people are working or losing jobs. They need consumer spending data to understand how strong the economy really is. This data is the radar screen for the global economy. Every interest rate move, every bond trade, and every stock decision depends on it. Now here is the real danger. If the government shuts down at midnight on Friday, the data stops. The offices that produce these reports close. The workers go home, the websites go dark. There will be no inflation report next week. There will be no jobs report. The radar screen goes completely black. Now imagine you are the head of the Federal Reserve. Bond yields are already rising. Banks are already under pressure. And suddenly, you are told you must run the economy with no data at all. You don't know if inflation is going up or down. You don't know if unemployment is rising fast. You are flying blind in heavy fog. Doing nothing is dangerous. Raising interest rates without data is even worse. So what happens? When central banks lose visibility, they panic. And when they panic, they use the only tool they trust. They add liquidity. They print money. The markets understand this. Hedge funds understand this. Global investors understand this. When data disappears, the Federal Reserve is forced to protect the system at all costs. That means flooding the market with cash to prevent a sudden freeze. They cannot risk the system locking up when they have no data to guide them. So they inject liquidity. They expand reserves. That is the reality of a data blackout. To keep the system from freezing, the Federal Reserve will do what it always does in a crisis. They will print. They will inject money into the system to keep everything moving while the government is shut down. They will choose inflation over instability every time. That is why gold is hitting new all-time highs tonight. That is why silver has surged past major levels and is not pulling back. The market is not waiting for the shutdown to officially happen. The market is acting ahead of time. Big investors know what comes next. They know the dollar will be weakened as the Federal Reserve reacts to political chaos. So they are buying protection now. They are moving out of assets that depend on political decisions and into assets that hold value on their own. They are buying insurance before the fire starts. And the timing could not be worse. This shutdown is not happening during a calm period. The financial system is already fragile. The repo market, which keeps banks and institutions funded day to day, is showing stress. The emergency cash backstop is already drained. There is no cushion left. A shutdown right now is like removing support from something that is already barely standing. It almost guarantees instability. And this crisis is no longer just about money or budgets. It has become emotional. It has become personal. While politicians argue in Washington, serious events are unfolding on the ground. This is where the story changes. This is no longer just numbers on a screen. This is about rising tension in the real world. To understand why a shutdown now seems unavoidable, you have to look at what is happening in the Midwest. While algorithms watch bond yields, people are watching events unfold in real time. We need to talk about Minneapolis. Over the past 48 hours, reports have been coming in about a major escalation involving federal agents, not local police. Federal forces, ICE, Border Patrol, federal marshals. They were deployed for domestic operations. Late last night, the situation escalated rapidly. There are confirmed reports of a shooting involving federal agents, within a matter of days. And that event has poured gasoline on an already burning political fire. But this time, the story is different. This time, the person who was killed was not a suspect. She was not armed. She has been identified as a 34-year-old intensive care nurse. Someone who spent years saving lives in a local hospital. Someone who had just finished a long shift and was walking home. According to early reports, she crossed paths with a federal patrol during an operation. The full details are still being investigated, but the public reaction has been immediate. Videos of the incident are spreading quickly online. They are raw, they are emotional, and the anger is intense. People are not just upset, they are shocked. In the public's eyes, this was a healthcare worker, someone many see as a hero, killed during a federal operation. That perception has ignited outrage across the city. Protests have erupted and are growing fast. Large crowds are filling the streets of Minneapolis. Authorities are preparing additional security forces. The National Guard is being mobilized. This moment has changed everything. This is the event that breaks the budget negotiations in Washington. Just yesterday, there was still a small chance lawmakers could reach a temporary deal to keep the government open. Today, that chance is gone. Senate Democrats have made their position clear. They say they will block any funding bill that includes money for these federal deployments. From their perspective, supporting that funding would be politically and morally impossible. At the same time, Republicans cannot agree to remove that funding without angering their own supporters. Both sides are trapped. There is no middle ground. This is no longer a disagreement about numbers. It has become a fight about values and responsibility. When politics turns emotional, compromise disappears. That makes the shutdown unavoidable. The government is now expected to close on Friday, and that means the data blackout will happen. Economic reports will stop. The Federal Reserve will be left without guidance. Now think about what this does to investor psychology. Markets can handle uncertainty. They cannot handle chaos. When financial stress combines with visible social unrest, investors look for safety. They look at banks under pressure. They look at unrest in major cities. And they ask a simple question: where can money hide when trust is breaking down? Not in retail stocks, not in businesses exposed to the streets. That is why capital moves toward hard assets. That is why precious metals shine in moments like this. So where does the money go? Do investors buy government bonds from a system in crisis? They buy the one thing that stands outside politics. They buy what is neutral. They buy what is private. They buy gold. They buy silver. That is why premiums on physical metal are exploding right now. People are not buying silver to flip it for quick profit. They are buying it for safety. They are buying it because they can feel the system breaking down on every level: financial, political, social. Trust is disappearing. And when trust disappears, people stop holding currency. They move fast. They move into real assets. This is where the most serious warning signal appears on the charts. Silver is not just rising in price. It is accelerating. The speed of the move is increasing. And that matters more than the price itself. In markets, speed tells you everything. Speed tells you whether a move is normal, or whether it is panic. Right now, silver is showing panic behavior. We track a metric called time to travel. This measures how long it takes silver to move $10. And that time is collapsing. The market is speeding up. Let's look at the history. When silver moved from $20 to $30, it was slow and difficult. That move took 145 days. Every step was fought. Every rally was pushed back. Then silver moved from $40 to $50. That move was faster. It took 39 days. Resistance was weakening. But now look at what just happened. Silver moved from $70 to $80 in just 6 days. And the move from $90 to $100, a level many thought would never break, took only 10 days. That tells us something important. This is no longer a normal market move. This is momentum feeding on itself. And when speed keeps increasing like this, the move is not close to finished. In markets, price tells you where you are, but velocity tells you what comes next. And right now, silver's velocity is flashing red dot. Do you see the pattern? 145 days, 39 days, 6 days, 10 days. Each move is happening faster than the last. This tells us something important. The sellers are disappearing. The systems that normally slow the price down are no longer working. For years, computer programs have been used to cap the price at key levels. Sell orders would appear. Momentum would stop. That mechanism has now broken. Physical buying has overwhelmed the system. We are entering the vertical phase. This is the part of the chart where resistance fades. Think of it like a rocket leaving Earth. At first, it fights gravity. Then it clears the atmosphere. After that, there is almost no resistance. The higher it goes, the faster it moves. Based on the current speed, based on what we have seen over the last 2 weeks, the signal is clear. Silver is not stopping at 100. If the government shuts down on Friday and panic spreads from the data blackout, the next price levels will not slow it down. There is very little resistance between 100 and 110. Why? Because silver has never traded there before. There are no sellers waiting, no old price memories. It is open space. Based on the current momentum, a move to 110 within days is possible. That would mean a $10 move in about 5 days. And here is what makes this different. Normally, when prices rise this fast, you expect a pullback. But silver behaves differently during crises. As the price rises, demand does not fall. It increases. People don't see a high price and think too expensive. They see it and think, something is wrong with the currency. At $20, silver was an investment. At $100, it becomes protection. The mindset shifts from profit to safety. Fear replaces greed. And fear is far more powerful. So don't look at this chart using normal rules. Terms like overbought apply to stable markets. In a currency crisis, nothing is overbought until confidence is gone. We are watching resistance disappear. But while silver is exploding upward, something dangerous is happening underneath the financial system. Liquidity is drying up. There is a warning signal deep inside the plumbing of the markets, and it suggests the stock market is under serious stress. Silver is rising, but the system that supports stocks is tightening. That is why we now need to talk about liquidity. Because this next signal may explain what happens next to retirement accounts and risk assets. This is the moment when casual viewers lose interest, and serious investors lean forward. I need you to stop watching price charts for a moment and come with me behind the scenes. Because while everyone is focused on stock prices and silver candles, something critical is breaking inside the system. Think of it like a car. The paint looks fine, the headlights are bright, but the oil pressure inside the engine is dropping to zero. Right now, We are seeing a warning signal that has appeared before every major market crash of the last 10 years. It is flashing red again. We call it the liquidity death spread. To understand it, you only need to know two interest rates. The first one is called SOFR. SOFR is the real cost of money. It is what banks and hedge funds charge each other to borrow cash overnight, using government bonds as collateral. This is private money. This is the real market. The second rate is called ORB. This is the rate the Federal Reserve pays banks to keep their money parked safely at the Fed. Think of it as an incentive not to lend. In a healthy system, these two rates move together. If the Fed pays 5%, the private market charges around 5%. The gap between them should be close to zero. But right now, that gap is opening fast. SOFR is jumping higher than ORB. That is a serious problem. It means banks are saying, we don't care what the Fed is offering. We are afraid to lend. Cash is becoming scarce in the real economy, even while officials say there is plenty of it. Banks are holding on to their money. They are pulling back from lending. They are looking at a possible government shutdown. They are seeing social unrest. And they are deciding the risk is too high. This is the danger zone. Because the entire stock market is built on cheap borrowing. Hedge funds use overnight loans to amplify their bets. When borrowing suddenly becomes expensive, that system breaks. When SOFR spikes, leverage stops working. It is like draining the oxygen out of the room. This is when margin calls start. Traders get a message saying the cost of borrowing has surged. They are told to raise cash, and the fastest way to do that is to sell stocks. That is how crashes really happen. Not because companies suddenly fail, but because liquidity disappears. And right now, liquidity is flashing a warning. When traders run out of cash, they are forced to sell. We've seen this before, in 2008, in 2020, and we are seeing the same setup again, just days before the government is expected to shut down. Now here is the part that matters most if you hold physical metals. When liquidity freezes, almost everything gets sold. Stocks get sold. Bonds get sold. Crypto gets sold. Anything that depends on trust. Anything that depends on someone keeping a promise. All of it gets dumped to raise cash. But there is one exception. There is one asset that becomes the final form of collateral. Physical gold and physical silver. These assets have no counterparty risk. They don't need a bank to stay open. They don't need a government to function. They don't rely on credit ratings or promises. They simply exist. When banks stop trusting each other, they may refuse bonds or paper claims. But they still accept metal, because metal does not default. This is why we are seeing something unusual. In most crashes, everything falls together at first. This time, liquidity is drying up, but silver is rising. That tells us the market already understands what is coming. It knows that when the data blackout begins and cash tightens, the safest place is outside the banking system. The liquidity warning we talked about is not bad news for silver. It is fuel. It tells us the paper system is locking up, while the physical system takes over. So here is what to watch next. Watch the overnight lending rates. If you see borrowing costs rise while the Federal Reserve stays silent, that is the signal. That means the freeze has started. And now we come to Monday morning. Tomorrow's market open is critical. We have political tension. We have social unrest. We have a liquidity warning flashing red. The algorithms will react fast. For unprepared investors, it could be painful. For those positioned correctly, it could be an opportunity. I have analyzed the setup, and there are very specific moves we are likely to see when markets open on Monday, January 26th. This is the most important part of this broadcast. You've seen the big picture. You've seen the warning signals. Now you need to know what happens next. Because the first trading session of this week may set the tone for everything that follows. When you combine the Trump statement, the unrest in Minneapolis, and the tightening of liquidity, the system is on edge. The algorithms are ready to react. Here is my outlook for Monday, January 26th. First, look east. Before New York even wakes up, the Asian markets will set the tone. Markets have been closed all weekend while serious events unfolded around the world. Orders have been building up for 2 full days. Traders in Singapore, Hong Kong, and Sydney have seen the headlines. They see the shutdown coming. They see rising tension. And when their markets open, many of them will rush to buy silver at whatever price is available. That usually creates a gap. Instead of opening near Friday's price, silver could open higher right away. It may jump to a new level before anyone in the US has a chance to react. If you are waiting for last week's price, it may already be gone. Next, watch volatility. The VIX, which measures fear in the stock market, has been unusually quiet. But tomorrow, the countdown to a possible shutdown becomes very real. Risk managers on Wall Street will suddenly have to face the idea of a data blackout. That shock can cause volatility to spike. When volatility jumps, stock trading algorithms react automatically. They sell. That means the major stock indexes could open lower. This is money moving away from risk and towards safety. Now here is the most important warning for tomorrow. Be careful of a false move. On mornings like this, there is often one last attempt to shake people out. You may see a sudden drop in silver early in the session. It can look scary, but that kind of move is often short-lived. In recent weeks, every dip has been bought quickly. The buying pressure is strong. If you see a brief pullback, it is not necessarily a collapse. It may simply be a pause before the next move higher. The speed of this market tells us something important. Buyers are waiting. They are alert. They are ready. And once momentum takes over, there may not be another chance to slow it down. The fundamentals, the government shutdown, the social unrest, and the liquidity stress are all too strong for any manipulation to hold for long. So the plan for Monday is simple. Expect volatility. Expect the screens to flash red and green. But keep your focus on the real prize. The liquidity spread is widening. The data blackout is coming. The system is under pressure. And the exit doors are closing. Here is the verdict. We have shown the intelligence. We have shown the threat of a government shutdown in 6 days. We have shown the spark of social unrest in Minneapolis, and we have shown the liquidity warning flashing in the banking system. This is not random bad news. It is a convergence. 3 massive storms, a political, social, and financial, are colliding at the same time. And standing in the center of that storm, ready to absorb the flow of capital, is silver. Here is the most important advice for the week ahead. You will see volatility like you have never seen before. There may be moments, tomorrow or later in the week, where silver drops $5 in minutes. The red candles may look frightening. Your fear will tell you to sell, to take the profit, to get out. Do not listen to that voice. Those dips are temporary. They are traps designed to shake you out just before the real move begins. Remember the momentum. Silver moved from $90 to $100 in just 10 days. That kind of movement does not reverse instantly. The buyers are aggressive. Investors around the world are waiting. If you see a brief drop, it is only a desperate bank covering a short position. They want your seat on the lifeboat. Do not give it to them. Understand the next 6 days. On Monday, the market will be cautious. On Wednesday, panic will grow. By Friday, if there is no deal, and with social unrest continuing, the system could go into full liquidation mode. Stocks will be sold. Bonds will be sold. Cash will be scarce. Money will have to move somewhere. And the only safe place will be hard assets, so silver and gold. We are looking at a target of $110 by next weekend. Even that is just a milestone. In a true liquidity freeze, where trust evaporates, silver can go to a point where it cannot be bought with paper money at any price. We are dangerously close. Prepare yourself. Check your positions. Check your physical stack. Turn off the mainstream media. They will lie until the very end. They will say the shutdown is temporary. They will say the unrest is contained. They are wrong. The system is breaking. The liquidity gap is widening. The momentum is vertical. The only safe move is to stand your ground. Let traders trade. Let gamblers gamble. You are not a trader. You are an owner. And this week, the owners win. This is John A.G. The countdown is 6 days. The blackout is coming. Hold strong.